Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be looking at a damage report. If you guys like the content, please subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So the last video I released was a joke, okay? And I think that some people, they may have not gotten that. It was just a parody, more or less, of Game of Thrones and Hold the Door. But it's probably time for a more serious video given the drop today. So let's go ahead and do that. And so what we're going to do in this video is we're going to look at a lot of different scenarios. This video is probably going to be longer than the average video on this channel. But I really want to go through a lot of different scenarios and sort of show you guys what I'm looking at. So again, let's just take it one step at a time and go through and look at these various scenarios that could play out and what that would mean for Bitcoin in this market cycle. Okay, so let's go ahead and jump in. The first thing we should note is what are some milestones that have been breached. Okay, well, the 20-day has been breached. We're below that. It's the yellow line. The 50-day has been breached. So the 20-day is at 55,000. The 50-day has been breached at 56.6K. The 100-day, which is more or less what we held as support over here, has been breached, and we've fallen below that, and now it's at 53,682. Okay, so in terms of the daily moving averages, the next obvious one to look at would be the 200-day moving average, which is actually a lot lower at 38,888. So the first thing I should say is that there certainly is no guarantee that we hold the 20-week moving average. Okay, so the 20-week moving average is the yellow line. And let's just briefly hide these, and we'll show the bull market support band, which is a combination, again, of the 20-week SMA and the 21-week EMA. Now, we did a video a few weeks ago saying that after this cross of the 20-week SMA and the 21-week EMA, there would be a decent probability that we test the 20-week SMA in the coming weeks, or at least the bull market support band, either the 20-week SMA or the 21-week EMA, that we would probably test these levels in the coming weeks. Did we say this because Ben just thought it was his gut feeling? No, it was basically just looking at historical moves and seeing that, okay, well, once these cross, a lot of times we get a test in the not so distant future. Now, one of the things we've discussed, there's several things, okay? But one of the things we've discussed is the idea of so we could hold the moving average. So if we hold the bull market support band, then that would be the most bullish case scenario, would be holding the bull market support band. This is what happened in 2016 and 2017. You can see that we systematically held our 20-week SMA many times. However, there are some differences between this time and the last cycle. Remember, the last cycle, the time between tests of the 20-week moving average were not that long, typically ranging from 2 to 3 months, okay? And if you look at all these tests of the 20-week SMA, we didn't really go that long, okay? We didn't go nearly as long as the amount of time that we just went. You can see that most of these are 2 to 3 months. Some of them may be slightly more, some of them may be slightly less, but the only one that was longer was this last one that took place maybe 120 to 130 days. Now, if you look at the current run, in fact, instead of being separated by 2 to 3 months, this one was separated by 217 days. If we actually zoom in and find the last actual test of it, it was right here, which was exactly 231 days between tests of the 20-week SMA. So 231 days. So the argument is Bitcoin too far gone? Is Bitcoin too far gone to hold the 20-week SMA? That's the question. And the reason why I think we all need to be somewhat open-minded about whether it can or cannot hold it is because it has been a long time since we tested it. And to give you guys an idea of how far we've moved up, the last time we tested it, Bitcoin was at $10,000. Now we're at $50,000, so it's literally gone up 5x since the last time we tested the 20-week SMA. And that's the reason why I'm just saying, you know, I think a lot of people, because we've spoken about the 20-week SMA for so long, a lot of people assume that we have to hold it. And I will agree that holding it would be the most bullish scenario, And remember, even if we do hold it, it might not just be a bounce from one week to another. It might not just come down and then immediately bounce back up. If it, we've seen the 20-week SMA be tested for months at a time before. This one was a month and a half. If you go back to last cycle, there were phases where we tested the 20-week moving average for 3 to 4 months straight before really breaking off of it. So let's keep an open mind in terms of, can it actually hold it or not. So that this is the thing that we need to discuss is, what would happen if we didn't hold it. Okay, so the bullish scenario would be, okay, Bitcoin holds it, and we pretty quickly either go sideways on top of it, or we eventually bounce back up and put in new all-time highs. That would be the most bullish scenario. But I said we're going to walk through a lot of the different scenarios, because I want to take us from the most bullish to the most bearish, so that we can be prepared for what could be coming. Most bullish, I would say, a systematic test of the 20-week moving average, and we continue higher. Now, if you go back again to 2013, we talked about how we tested the bull market support band at $10. The next time we tested it was at like $90 or something, which was a 9x. But remember, diminishing returns. So we're going to see lower returns this cycle than we did 2 cycles ago. But in that instance, you can see we didn't hold the 20-week SMA, and in fact, we dropped below it by approximately 20-something%. And at the bottom of the wick, it was a 30% drop below. Now, to give you guys an idea of what a 30% drop below today, what would that look like? What would a 30% drop below the 20-week SMA be? Well, at the current 20-week SMA level, that would take us down to $34,000. To give you an idea of the correction from the 20-week SMA back then. Now, if you look at some of these moving averages, there's the 20-week SMA. This is our first line of defense, our major line of defense, first significant line of defense. Let's continue on. So this is a 20-week. The 50-week is all the way down here at 27,000. So, it's so much further down. We have the 100-week at 18,000, and we have the 200-week at 12,445. Now, why do we show these values? Well, remember, these become very, very unimportant when things are bullish, but then when things are bearish, they do become important again, and people start to, speculate on, okay, well, where are we going to bounce if we don't hold the 20-week as support? Now, we've drawn some comparisons before between the current move and the move in 2019. And you might say, well, hey, Ben, the move in 2020 and 2021 is nothing like 2019. And I would agree with you. There's a lot of differences today than what we experienced back then, but there also are some similarities. Some of the similarities include the fact that rather than have a blow off top like 2017 or 2013 or earlier in 2013, rather than just have a blow off top and then a major correction, instead it looks more like 2019, where it had a slow move back to the 20-week. Okay, so imagine we were to take a bar pattern from say here all the way over, and we shifted it across. Let's say we shifted it across. Now we can tell that this move has been a bit more significant, but if you look at this move, there are some similarities in the fact that it was a slow bleed more or less back to the 20-week SMA. And you might look at that and say, well, hold up a minute, Ben. Bitcoin didn't hold the 20-week SMA back in September of 2019. And that's the point. The point is that there are bearish scenarios. Okay, there are bearish scenarios. We walked through this bull, this entire start to the bull market. We've walked through it. We said we need a golden cross, the 50-day going above the 200-day. We got that. If you're not sure where that happened, it happened. We're looking for the yellow line to cross above the orange one. So it happened right here back in May of 2020. That was our golden cross. After you get the golden cross, you also want to make sure that you're above the 20-week SMA, which we were. We got above it in April of 2020. And then the last thing we said is we need to go back down. We need to test the 20-week and hold it as support. And if we do, we're going to kick off the bull market. Okay, that was the implication back then. Where are we today? Okay, well, for the bull market to continue in the short term, we need to hold the 20-week. Okay, but there are theoretical scenarios that could take place where we don't hold the 20-week, but the entire market cycle is still intact. Remember, one of the ways we can look at this is what if we get a brief bear market similar to 2013? Similar to 2013, where it's not like a 2 to 3 year bear market and accumulation phase. Okay, so let's go back and look. This, by the way, if you guys don't, this move here from the bottom or from these candles right here down to these wicks, this was a 70% drop, but it didn't stop Bitcoin from going up another 600 and something percent from that level later that year. Okay, so we have to keep that in mind. Now we're gonna go through every a lot of these scenarios. So again, just bear with me. The first one being we're gonna show again the ROI from market cycle bottom. Okay, so we want to overlay that because we're now flirting with the levels that we were at back in or with the last cycle. So we're gonna overlay these, and that's cycle one, cycle two. And we're gonna color code this a different color so it shows up a little bit better. And then we're gonna get the last one and color code that one as well, a different color. And what you'll notice is that this cycle, if anything, as we said before, the last video, if anything, this cycle was ahead of schedule. Okay, ahead of schedule. Cycle 4 was ahead of schedule in terms of it being ahead of cycle 3. And I also said, well, hey guys, at one point it was ahead of cycle 2, but it did not ultimately keep pace with it. So the implication being, well, what if we end up coming back down for a while and then go back up and essentially repeat some similar type of structure that we saw a couple years ago? I'm not saying that's going to happen. I want people to be aware of that possibility because most people aren't going to talk about that possibility. I just want to mention that there is a chance that we don't hold the 20-week SMA. There's always a chance that we don't hold it, and assuming that we know we have to hold it is being deterministic, and being deterministic in this market is not generally the best way to operate. So if you were to take a bar pattern and overlay these and just shift this over and say, okay, well, what happens if we do something similar where we go back down to the 20-week SMA and we test it for a few weeks, but then ultimately we're not able to hold it, and then the 20-week, starts to come back down, and we do something like that, and then ultimately we get back above it and we continue along our way. That is a theoretical outcome that I don't think would be that surprising in the event of not holding the 20-week SMA. Now, what would that, this would be, say, like the most bearish scenario that I can imagine. Okay, this would be like the most bearish scenario. And in this scenario, you'd be looking at the 200-week. Okay, the 200-week moving average, if you're not familiar, tends to be our support in the bear market. So if we get a bearish scenario, like we had in 2018, we came back down to it in 2020. Let's suppose we come back down to it later this year when everyone thinks that we should be going to 300K. Let's just suppose something like that happens. The 200-week moving average today is only at $12,000, but by then it might be closer to $20,000. Okay, that's just one scenario. The most bearish scenario that we could really imagine would be going back down to that level and then sort of just bouncing off of it and then continuing along, and maybe we'll remember this as, say, like a triple peak cycle that looks something like that, right? Something like that, where instead of just going straight up, we have a double peak cycle if you don't want to include the 2019 peak, or we have a triple peak cycle if you do include all three. That would sort of be the most bearish scenario that I could see for Bitcoin. Now remember, if Bitcoin goes below the 20-week moving average, altcoins generally do not perform that well at that time, so that is something to keep in mind. Now, assuming we don't go to the 200-week, if we, let's suppose we don't hold the 20-week, but assuming we don't go to the 200-week, what are some other areas to look at? Well, the 50-week is, has managed to be a major bouncing area, like where we bounce from. We have seen significant bounces there before. Here was one where we bounced from 6,000 or so all the way back up to 10,000. And we've bounced off these levels before, especially after significant pullback, so the 50-week moving average. But again, there's these other, there's sort of these other intermediate moving averages that if we're not, say, in, if we're still in, say, the full market cycle, that we might not even go back down to those levels. Again, the 50 week is at 27,000. The 100 week is all the way down at 18,000. These would be very bearish targets in the event of not holding the 20 week and then continuing to dump. Now, looking at prior moves this cycle, there could be some other areas to keep an eye out for that are not just strictly moving averages, potentially 42K, a prior local top. This was a prior local top. So that could be an area to look out for as well. And we're not even that far away from it if you think about it. I mean, we've already gone down to, we went down to 45K or so earlier. From that point, it would only be about another 7% drop. From the current valuation, it would be about a 17% drop. So that might be an area to look out for as well. One thing I would like to say, though, is, in the grand scheme of this cycle, there's a lot of analysts who keep projecting the bull market to end in September at $300,000 or $400,000. And I think this is has a very small chance of actually happening. Remember, if we just simply go back and look at our different cycles and measure all of them, what are the key things we take away from it? Okay, what are the main things we take away from it, right? And sorry, I'm trying to go back and find them. The main things that we take away from it, again, are that the ROI from one cycle to another seems to be diminishing. I guess I'll just have to redraw them unless they were on this one. But remember, they seem to be diminishing from one cycle to another. Okay, so again, taking a bar pattern from over here and up and overlaying it. So we're just going to overlay it again. I probably shouldn't have deleted it earlier. That would be, say, the first one. If we get, say, the second one, it would look something like this, where it took longer to get to our cycle peak. It took a little bit longer than the cycle before. So we know I mean, that's at least a possibility that these patterns could continue to play out. So that would be the second one, and then again the third one was the last cycle where we just did something like that. Okay, this was the third one, and this one is obviously what a lot of people are more or less comparing to today. Okay, so 3 prior cycles, and the things that we take away from each cycle are that you get. And by the way, if I actually draw this to say the wick here, it looks something more like that. What do you notice though? You get diminishing returns, right? Diminishing returns, and the time from cycle bottom to cycle top is longer, right? It's expanded out, it's lengthened, and one way to show this is to measure the time between bottom to top. Okay, so this one was approximately 67,000% over 46 weeks. Okay, the next one was approximately 58,000% over 106 weeks. So you can see the time from bottom to top basically doubled. And then you look at this one, and the ROI was around 10,000% or so over 152 weeks. So far, as measured from bottom to top, we're adding about a year. It's not exact. I mean, the first one, it's about, this was 46 weeks, this was 106, and this is 152. So the difference is not exactly a year, and it also depends on exactly if you get the timing just right on the exact bottom. But what we take away from this is that, okay, the first one was 46 weeks, the second one was 106 weeks. The third one was 152 weeks. Okay, these are the 3 so far. And then if you project this out, where does it put the current one? So if you're to say take this from the bottom back over here in say December, and go out 100 and maybe I can try to get it a little bit more exact. It's kind of hard to see because everything's sort of overlaid, but let's just say it's somewhere. So I know it was in late 2018 here. So let's just say so far we're already at about 126 weeks. So we haven't even reached the time that the last cycle did. Okay, this is the last cycle. We haven't even reached that amount of time yet. if we were to peak in the same amount of time as the last cycle, it would put us at 152 weeks, which would put us in November. Okay, this would put us at the end of 2021. And this is one of the reasons why a lot of people think that Bitcoin will have its market cycle top in 2021, because that's how long it took last cycle, about 152 weeks or so. But again, the implication is, well, what if it doesn't do that? What if this cycle is longer? And some people say, well, why would this one be different than all the others? Again, I mean, to say that it has to be 152 weeks or approximately 3 years from the bottom is essentially just looking at the last cycle and sort of ignoring the other two. Okay, sort of ignoring the other two. So I'm not saying it can't happen. I'm just saying that what we're doing is we're just projecting a trend here and seeing that it's taking a little bit longer each time. So what if we added, like, I don't know, 50 weeks? Where would adding 50 weeks put us? Well, if we went up to say 202 weeks, then that would put us actually in Q4 of 2022 for the cycle top, not Q4 of 2021. And so a way that we could potentially get there it would be to not immediately go to 300K in the next 5 months, like, a lot of people think we will, but it would maybe be to have a cool off phase for a while. And then we go up and put in, say, like a market cycle top. And then it looks something like that. So we continue to get these diminishing returns. Obviously, I don't know exactly how it's going to look, and expanded or lengthened cycles. So that's one option in order to get there. Now, you might say, well, Ben, measuring it from bottom to bottom is somewhat cherry picking. Why don't you measure it a different way? And again, we can do that. I mean, we can measure it from, say, peak to peak if you prefer that. This one was over 903 days. This one here was over 1,484 days. So if it were exactly 1,484 days or so, that would put us peaking in the end of 2021, which is why a lot of people think the peak will come the end of 2021. But again, what if it takes longer? Just like this one was 900, let's just go with weeks because it's easier. This one was 128 weeks. This one was 212 weeks. What if the next one is, say, 300 weeks from peak to peak? Well, that would put us all the way out in the summer of 2023 if we were to go up to, say, 300 weeks between peaks. And this would just be one example of, okay, so we've looked at bottom to bottom, we've looked at bottom to top, we've looked at top to top. Now, another way to look at it is some people say, hey, why measure the mania phase at all? Why not just look at bottom to bottom? Well, we can do that too, and we can see, 69 weeks from here to here, and then we can go from this one to this one and say 166 weeks, and then we go from this one to this one, and we can say, okay, it's 206 weeks or so. So if the current one were approximately 206 weeks, then that would put us having our next bottom in November of 2022, which would be in line with the 4-year cycle. This would be in line with the 4-year cycle, meaning we would go up to what these guys are projecting. I mean, I think most of them are projecting 300K this year, and then having like a major blow off top where we go back into a bear market and have our bottom in say December of 2022. Was I saying 2020 earlier? I meant 2022. Having our bottom in, say, 2022, and then continuing on with the 4-year cycle. That would be the implication there. But again, in the same way that this was, this first one here was 69 weeks between bottom to bottom. This one was 166 weeks between bottom to bottom. This one was 206 weeks. So you can see, it's the amount of time is taking longer and longer. What if the next one is 250 or 300 weeks, or let's say 275 weeks or something? Where would that put us? Well, 275 would put us all the way out here in March of 2024, before the next bottom. So I think these are some things to just consider. But again, I mean, at the end of the day, back in 2019 and 2020, I was definitely more vocal about this stuff, and obviously 2021 has taken us for quite a ride, and so I think the best thing to do is to be flexible at this point and to say, well, if we do come back down and we're able to sort of regain support and then continue on like this, then it's not really doing anything different than what the data suggested could happen. And alternatively, if we hold the 20-week SMA and go to 100K next month, then then this is going to be an entirely different scenario. And if we do go to, say, 250 to 300K by the end of the year, then at that point I would certainly contend, hey guys, seems like the market cycle top is coming in 2021. So at this point we need more data, and one of the things I've been saying for a while is that we need to see how the summer goes. If the summer for Bitcoin is very bearish, and instead of holding the 20-week SMA, it's more like trying to get back up to the 20-week SMA and testing some other lower values. If that's what it's remembered as, then the chances that we go to a 300K Bitcoin by September, October, what some people are projecting, essentially go out the window. Alternatively, if Bitcoin holds the 20-week SMA, our most bullish scenario, if it holds the 20-week SMA, puts in a new all-time high next month, by July it's over 100K, by August or September we're looking at 150 or 200K, then yeah, I mean, it's happening quicker than what a lengthened cycle would project. So hopefully this video is informative. Again, I know it's longer than most, but I just sort of want to do an all-encompassing video to show you guys what I'm seeing in the markets. And while I can assure you I do not know what will happen in the short term, there's obviously benefits to holding the 20-week SMA, because if we hold it, then altcoins stay relatively strong. If we hold it, then people are going to remain relatively in a good mood, which is not necessarily a bad thing. But if we don't hold it, there would be benefits to that as well. And the key benefits would be giving you an opportunity to buy back in at prices you probably otherwise would have never assumed you could have gotten again. Okay, that would be the implication. From a fundamental perspective, I believe that this cycle, as I've been saying for years, this cycle is the cycle of institutions. I said all along that we need institutions to get Bitcoin to $100,000. And if this cycle is the cycle of institutions, we have to take a step back and realize that most institutions haven't even come on board yet. And a lot of institutions may want to come on board, but it takes a while to go through the necessary paperwork just to get Bitcoin on the books. So what seems to happen to me is, okay, well, we had Michael Saylor and MicroStrategy coming on board. This obviously led to more FOMO, and then at this point, then you had Tesla buying Bitcoin, or at least announcing they were buying Bitcoin, and then we broke through 42K. But again, in the grand scheme of things, there's a lot more bigger fish in the sea that haven't been buying Bitcoin, and a dip by Bitcoin would probably make it more attractive for these guys to get in. The last thing, I imagine the last thing that most institutions want to do is buy a local top, right? That's probably the last thing that a lot of institutions want to do, is buy a local top. And so a dip back down to somewhat more attractive levels then gives these guys a little bit potential theoretical ROI over the course of the market cycle, and probably makes it a little bit less risky play if it's not buying Bitcoin after it's up 20x in 13 months. Okay. So just something to keep in mind. We've talked about the bearish scenario, breaking the 20-week SMA. Obviously not good for altcoins. The bullish scenario would be just holding the 20-week SMA. And again, even if we do hold it, it could be a long test of the 20-week SMA. It might not just be like a single test. It could be like what we had in August and September and October, where we tested it systematically over a month and a half. Maybe this one could even be longer. Even in the most bullish scenarios, I feel like testing the 20-week moving average for a number of months would not necessarily be the worst thing in the world. So these are the scenarios. These are the scenarios we need to keep an eye out for. And remember that if we do come down, just like we did over here, at some point we would probably come out the other side and continue our journey. But this part might not be the easiest path to navigate. To give you guys an idea, if you weren't around back in 2019, from breaking the 20-week SMA, we then bled 62% over 168 days. Okay, 62% over 168 days. What would that look like? I mean, what would that look like? Well, if we did do something like that again, 162 days would put us, or 168 would put us out in October, just when most people think we're going to peak. And 62% down would be pretty bearish if that were to happen, but it would take us all the way down just shy of $20,000. And that would be, that would probably be very hard to actually achieve those prices again. I mean, you'd have to have some crazy wick like the wick we had back in March, based on the pandemic. So I don't really know if that's going to happen again. But that would be, say, the most bearish scenario, which would also likely line up with the 200-week moving average, like something like that. Like it would line up with the 200-week moving average, like it did there, and then we would continue along. That would be the most bearish scenario that I can imagine, and the most bullish would be just holding the 20-week and continuing higher. So regardless, obviously 2021 is going to be very exciting. Looking at the monthly candles, I mean, we seems reasonable for it to cool off for a little bit. This was 1, 2, 3, 4, 5, 6 monthly candles in a row where Bitcoin was just going up. This was 28%, 43%, 47%, 14%, 37%, and 30%, followed by -2%. Now we're at -13%. So remember, if it is a double peak cycle, if it is a double peak like we had in 2013, which you can see here, 2 monthly candles in a row that were red. If it is a double peak cycle, you have to have the first peak at some point, right? Otherwise, it's not a double peak cycle. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Remember to check out the sale on the premium list, the bull market sale. You can lock in the lower rate and get insight into how I'm navigating these markets. Check that out in the description below as well. Thank you guys for tuning in. Remember to give the video a thumbs up, and I'll see you next time. Bye.